What's going on, traders? Andrew O'Connell here with Pristine Capital. Wow. What a wild day in the markets, am I right? A nice quiet day, huh? No, today was anything but. Today was wild. Oh my Oh my god. It was pretty crazy. I actually took a nap. I actually took a nap after the bell today because honestly, watching all the price action the whole day was just like, geez, this thing is getting killed. Let's dive in. I'm like at that point where I'm like tired, so everything is funny. I was thinking about not doing this recap video today, but I was like, you know what, I gotta give these people their recap video. So let's dive into it. Before we do, nothing in this video should be construed as investment advice or recommendations. Always follow your own trading plan, your own risk parameters. Don't YOLO your entire account into any one of my trades. All right, let's dive in. So let's look at this bloodbath. Sorry for laughing. Normally I would just do like a second take if I mess up like that, but let's just dive right in. All right, the S&P 500, it's down 2.74% today, and after the bell, it just kept getting destroyed. Then we have the NASDAQ QQQ down 2.62%. Oh my gosh, this one also just got absolutely destroyed. Small caps down 2.59%. The Dow Jones down 2.71%. And the ARK Innovation ETF, this was like the one divergence today that was actually pretty good. That the ARK ETF, it actually went down a lot less than these other areas of the market that are a lot more like, you know, consider the safe havens or like the safer stocks or whatever. The volatility just exploded. Look at this. The VIX was up 24%. Like all these just really exploded out. And we had washout breadth. Our trend model is still at a -3. And remember, this flipped to -3 yesterday. So it really just goes to show like the process that I'm running. This has been like years in the making of really just developing like something sound that'll help keep me on the right side of the market. So that's why I include this on the slide deck for you guys, because I just want to share it with you as well. This thing is very helpful. So yesterday, if you watched the video, like I exited pretty much all of my risk, and I was able to do so as we failed at the 20-day simple moving average for the S&P 500. And that was great because look at today, like this was just an absolute bloodbath. Players are really just hightailing it out of the market, and we saw the signs of it yesterday. All of the leadership stocks like energy, those got killed. And of course, we can only see these things with 2020 hindsight. I mean, for me, I knew, hey, my trend model flipped. I'm seeing red flags. Let me get out. Of course, I never know what's going to happen in the future. It's not like I can predict this stuff or whatever. But now in hindsight, it's kind of interesting because I'm like, wow, so the energy stocks and all the leaders, those really broke. They had huge red candles. And now today we get this absolute bloodbath. So maybe that's just something to keep in mind moving forward. Hey, if you start to see those leadership stocks really get killed, then you know something is up. Sectors, yeah, these also just absolute demolishing of everything except KWEB. The Chinese Internet ETF finished slightly positive. But yeah, pretty much, what got hurt the most? Medical devices. Yeah, medical devices materials were down 3.74%. Healthcare was down big. Remember, these are the groups that everyone was trying to hide out in for most of the year. These like safer stocks, inflation stocks, and they finally got killed. Style factors, we had this momentum style factor down over 3%. Yeah, and these all, they all got killed. Let's actually just take a look at our indices for today. So look at this, the S&P 500, a trend model obviously negative. I added this to my charts as well, the trend index as well as the tick, and I posted this here for all members of the Pristine Capital trading community. This is just like little primers on these, and I also shared the code for these as well. So if you want to learn more about the tick index, you know, you can always Google it. If you're not a member, if you are, you can just pop right in there and take a look. Anyway, so yeah, we noticed yesterday, hey, everything failed. This is a horrible look. And now today we plunge below this downward trend line, this teal line. And look at where we are now. Look how fast this can occur, team. So I've been mentioning this, like I actually put out a separate YouTube video. Normally I just do market recap videos That's really like the sole purpose for my YouTube channel. But I put out a video, I said like, hey, I'm hedging my portfolio. It has a 10-to-1 risk reward payout. I put on like a SPY butterfly. And I laid out how like, hey, this technical scenario just looks pretty faulty. So I'm going to go ahead and hedge myself. And this is exactly what I was talking about. If you go and watch that video, like I basically said, hey, we just failed at the 20-week simple moving average up here. That leads me to believe, hey, maybe we could get to this 41.86 level. And then if we get there, we've already tested that level 1, 2, 3, 4 times. So there's a higher likelihood that that could even fail. So as I look at this technical scenario, you know, of course, again, like I can't predict the future, nothing like that. None of us can. Anyone that thinks they can is probably a new trader or a new investor. And there's this really good saying, one of my mentors told me this one. He's like an old school trader guy, but it's, there are old traders and there are bold traders, but there are no old, bold traders, because really the bold traders end up getting killed, the ones that think they know something or whatever. But yeah, as of right now, we can't rule out a move down to 40.55 on the S&P 500. I must say though, I was pretty shocked at the extent to which this just gave up the ghost all in one day. And there is that other saying, like, it's so funny with all these trading cliches, there's so much truth to them. The other trading cliche is from false moves come fast moves. And we, sure enough, we got a false move here. It looked like we might break above that 20-day moving average, that resistance. And when we did not do that, all of a sudden we got the fast move, and here we are. Now we're below this monthly point of control. On the hourly chart, we're definitely oversold, and I'll pull up my trades for the day. I did not trade perfectly today. Yesterday, I would say I traded perfectly. That's why in this video I was like, let's go, killed it. Today I still did pretty well, but I did make some errors, so I'm going to talk about that, because I like to talk about the good, the bad, and the ugly. Because my goal is really like, I want to share the wins and the losses with you guys. That way you can learn from everything I'm doing. Like, you can learn from the good things I'm doing. You can also learn from some of the errors as well, because I certainly make, you know, my fair share of errors. So here was the error. And again, this wasn't really bad. Like, it's a pretty small trade for me, but sometimes I just really want to be like perfect. I did take some SPY May 20th 432 calls at 11 o'clock. And the reason why I did that was because, in the short term, the market was oversold. I put here day trade to short term swing. Now remember, my trend model was negative. It's at a -3. It's been that way since yesterday. Luckily, I'm out of my risk. I do have a portfolio hedge on, so it's not like, you know, like 99% of other people on FinTwit that probably blew themselves out today. But just in terms of execution, what I was looking at was, okay, when I look at my SPY chart, and look, this is actually this is like my profit window for my butterfly. We're actually approaching it, funny enough, pretty quick. But yeah, this is, let's pull up, like, what over here. I'll show you what I mean, and look at this. So I was looking at the SPY Bollinger Bands, and this is if we pull up our 2 standard deviation Bollinger Band. Let me see. Sorry, just bear with me here. So yeah, 2 standard deviations. And what I looked at was, I said, hey, you know, my trend model's negative, longer term view on like a swing time frame is negative, but hey, intraday or maybe on a shorter term time frame, we tag the 2 standard deviation Bollinger Band. I'm going to buy some calls. And I think part of that too is like, I was in mostly cash as well. So sometimes when I'm in all cash, that's another one of my things that I'm trying to work on. When I'm in the most opportune position, like I'm like, all right, I have 90% cash. The market is just liquidating. Like I'm in the driver's seat. Sometimes what I'll do, and I'm not going to do it after this because I'm recording it in this video. What I'll do is I'm so like sitting in the catbird seat that I'll get a little bit impatient to like deploy the capital, because I'm like, I'm already in the best spot. I'm in safety, but I don't want to then like stay in safety too long and I guess like miss the bottom. It's like a form of FOMO. See, I took those calls when we hit this lower Bollinger Band, and I was looking for the balance, but we just got even more oversold. So yeah, again, I'm in a hedge, whatever, but that was a tactical error. because as a trader, you do sort of have to pick your time frame. Like, I know how to day trade. I know how to swing trade. I have my 10,000 hours of experience doing fundamental analysis. Like, I'm a chartered financial analyst. I used to do credit research. Like, I can do fundamental long-term investing too. But sometimes, like, I can do premium selling, like, you name it. It's not me bragging, but it's just like I'm a total investments junkie. Like, I've given my life to this. But you do have to choose your lane. Even if you do learn a lot of strategies, I must say you have to pick. Because let's say you're more of like a swing trader or a position trader, which people watching this video might be, because I know some people watching this video, you guys might have 9-to-5 jobs and you're more like, hey, I'm more concerned about like the weekly time frame or whatever. So for everyone out there, like, you could be having like your big picture outlook, like, yeah, I think the market's going to be heading lower throughout the year because of the Fed policy tightening, whatever it might be. But if you're also trying to trade that short-term time frame where it's like, I'm bearish on the longer term, but then intraday I'll trade to the long side and whatever. In theory, it sounds like you can do that successfully, but in practice, especially when the stakes are so high like they are now, it is tough to do that. You can sort of get like caught up where it's like, oh shoot, I was bearish on the long-term time frame, but now I'm like stuck in all these bags because like on the shorter term time frame I was bullish and then the market kept going or whatever. So that's definitely something to keep in mind. It's something even this weekend, like when I think about my trading, whatever, you know, I want to make sure, like, my bread and butter is the swing trading and the position trading, really, like holding things on maybe for like a couple days to a couple weeks to even a couple months. I really like holding things for as long as I can. So yeah, that's just something to keep in mind. Maybe some others are going through that same thing where it's like you're trying to do multiple strategies. But anyway, the market definitely in its downtrend. At this point, though, we definitely are getting oversold. If you are short or if you don't have any hedges or anything, now it's going to be pretty tough to enter those hedges, I must say. Because now this is when like the consensus, they get like super bearish, and like I'm going to do my weekend analysis for all Pristine Capital members. And we analyze like the sentiment, we analyze the economic data, we go through everything. And yeah, you're going to see, like, even if you look at your Twitter feed, now everyone is like super bearish and whatever, but it's actually very tough because now the implied volatility is so high. Another thing I want to point out for you, just to give you more context, is this total put to call ratio. I noticed that yesterday we hit this 1.11, so we got pretty elevated. This has not updated for today, but when I looked at the CBOE intraday data, this also completely blew out. This 1.3 level that we closed at, this means investors, they are just dying to get some protection. So again, this sets up for a very volatile week as of next week because, yeah, now everyone's loaded up to their eyeballs with protection. So of course, typically when that happens, and typically when your FinTwit feed gets all bearish and whatever, the market can be prone to a bounce. But overall, yeah, the trend is still negative. I want to make sure that I'm respecting that. And really, you know, that's that. If I start getting traction in some positions, that's great. But if not, you know, I just got to make sure I'm using my sit-out power. Other options trade, I had sold some Netflix April 22nd, 205 strike puts. I received a credit of $1.31 for those, and those expired worthless, which was great. So Netflix, take a look here. Yeah, this, the implied volatility was so elevated. Yeah, I just sold those puts, and this kind of stabilized. So yeah, ended up making some lunch money on that one, which was good. And then what else do we have here? Yeah, then for trading common stock, these, I had some undercut and reversal setups that were lined up for this morning. I tried a Global E and I tried Upstart. These were not errors because I planned these trades out to a T, followed the plans, whatever. Global E, I took an attempt at this one with a nice tight risk reward, got long the common shares. This one ended up taking me out. I took my stop, which is perfectly fine. That one, flawless execution, it is all good. And I took a nice setup with some edge here. I think it was just, again, you know, with my trend model, that negative and just the overall market getting blasted like that. You know, this one ended up taking my stop. It actually closed slightly higher than where I stopped out though. So yeah, this one still looks like it could work. Definitely still a setup that I'll probably look at for next week. And then Upstart, this was the other one that I took. This one did not stop me out, so I actually left this one on. And Upstart, take a look here. So you can see I have my stop in right here. Upstart, yeah, look at this. So Upstart did not do bad at all. It was only down 0.49%. And you know, if you look at the S&P 500, it was down 3%. So yeah, as everyone's like losing their minds looking to buy protection, you know, that's a name where, hey, this thing's getting obliterated, and you know, it has gotten obliterated and it's really not moving to the downside anymore. So yeah, overall these markets are still very negative. Right now I'm in 80% cash. I have a portfolio hedge on, and yeah, I'm feeling pretty comfortable with where I'm at. But yeah, we'll have to see what the river brings. I mean, my butterfly is starting to expand my hedge, and I'm definitely glad that I have that thing on, because I gotta say I have no confidence that this market is gonna rally on a sustained basis. Like, I'm definitely talking to a lot of investors and traders out there. It's definitely getting me a little bit concerned. Like, a lot of investors that I know, they're kind of just like doubling down and like, oh, it can't get much worse than this and whatever. But yeah, on this weekly time frame, like especially with what's going on with inflation and what the Fed is doing, I'll leave you off on this. No one knows what the market's going to do next. All we can do, as always, is follow the technical roadmap. And I must say, like, look at this. This was the pre-coronavirus highs. And I remember back when the market was at like the 3,000 or 3,200 level, it seemed like, oh my gosh, this market is so darn overvalued. And that was back here before Corona. Then throughout here, you know, it paid to just follow the technical roadmap. The market was moving up. Why not follow it? That's really what got you paid. Now, as the market's entering this malaise, I notice there are people out there that are not really following the technical roadmap. They're just kind of like, yeah, the market always goes up. It's got to go up. It's got to bounce. But definitely just be cognizant the Fed is pulling back on their monetary policy. And we don't know what's going to happen. Like, if this technical roadmap leads us, who's to say we can't go down to, you know, 334 on SPY or whatever, back to where we were pre-coronavirus. Not saying that's going to happen, but I have no confirming evidence that says like that's out of the realm of possibility. So yeah, hope you all have an awesome rest of your weekend. This was definitely like a more off the cuff, just kind of like ranty market recap, kind of losing my mind. It's pretty late at night. But yeah, hope you all get a nice restful weekend. I'm going to be doing my weekend market analysis video for Pristine Capital members. I'm also going to be doing my weekend watch list video, so be sure to look for those in your inbox this weekend. Appreciate you all for watching these videos. You guys are all awesome. Definitely leave a like if you enjoyed the video. Definitely subscribe to the channel, and I'll see you all next time.